Welcome to Charting the Markets. On this Wednesday, we're very nearly at the end of the month. We are looking at something like around about 5-year lows for volatility. What's this mean for us traders? Under normal circumstances, it would mean that it's difficult to get a bite on the market. But in fact, there are pockets of interest, which we'll cover in the next 15 minutes with our guests. I'll introduce you in just a moment. But I think the backdrop to where we are at the moment fundamentally is interesting, with the expectations for interest rates. Had the market started to misprice this? The concerns are, I know, amongst many that we are at what appears to be very lofty levels on some of these markets. The big question is there any more to go? Well, let's take a look now in some more detail about where we are and what we're doing and how we go about trading these markets with a regular guest here on IGTV. It's Lee Sandford, who joins us from tradingcollege.co.uk. Lee, welcome. My understanding is you've got a lot of clients passing through your doors at the moment wanting to trade these markets. What are you saying about where we are going into the back end of the year? As I said, with volatility where it is and the markets at these current levels, what's the message you're giving to your clients?
Well, I know the volatility is low, Jeremy, but we're seeing some cracking trading opportunities, especially on the short term intraday. I mean, the stock markets have been straight up, and so it's been easy to buy these stock indexes. Every pullback, we've been looking long. This morning in the live trading room, it was just on the open at 8 a.m. It's just straight up on the DAX and not so much the FTSE. We'll talk about the FTSE in a minute, but it's been good trading conditions. There are pockets.
The psychology around this is interesting as well. We haven't touched on this too much before, but the behavioural attitude that traders have is when you get up to these levels, the natural instinct for some is to sell. They think it's gone too far. But technically, we should be looking at a number of different sort of indicators to support us throughout trading. Let's bring up the NASDAQ first of all and take a look at how you put together the chart today, giving you confidence about where we are and where we're going.
Well, we've been bullish. Every index has been pretty much bullish, the main ones we've been looking at. But the NASDAQ here has been extremely bullish. And look, we've spoken about Elliot Wave, 5-wave advances before, myself and you, Jeremy, on these programs. And you can see here on the weekly chart, it's a clear 5-wave advance. 1, 2, 3, 4, and 5 here. Now, this looks like a 5th wave on the weekly for me. We've got this huge trend line coming across the highs here, and we have a little bit of divergence on the MACD. So for me, as a technical trader on a long-term position, you know, we're getting a little bit high here on the NASDAQ. We've got trend lines above. The 5 waves up is close maybe to, I just think that the next correction is going to be very interesting, I think, on the indexes. The NASDAQ looks like it's close to at least a weekly high and a potential pullback for, you know, a couple of weeks here. We're just not seeing that at the moment, though. But it's around the corner.
Yeah, so these are 1-week candles we're looking at here to give us a longer term picture. You've got here at the bottom the RSI, Relative Strength Index, and the MACD. How do you use those? Remind us how you use those to help out trading. I mean, the MACD is interesting. I have that on every single one of my charts. And we're getting this flip round at the moment where the blue line is passing above the red signal line. That would indicate to me that momentum is beginning to build on the upside, but you're saying not necessarily.
Yeah, I'm okay on the cross of the MACD lines, the MACD line and the signal line, but I like the little hook here. Can you see that little hook?
Yeah.
Well, that was down in these areas here as it broke that weekly high. So that little hook there turned up, which gave a nice buy signal. I'm a little bit earlier when it comes to MACD with these little hooks here. I don't look for the cross, but the cross is bullish. But because of the whole structure of the advance and the 5 waves up, we know from a wave count or a trend footprint that there is a potential high coming soon. When?
So well, that's the big question. What you do? You're going to wait until you get a signal to because then you have the ABC or the 3-wave reversal, don't you?
Yeah. So you'll have the A down, the B up, okay, and what will happen is then you'll have the C down. At some point. But this is the weekly chart. This is going to happen over a long period of time.
Right.
For traders, IG clients, of course, a lot of the short-term traders, you'll be down to a 4-hour time frame at some point, looking for those weaknesses and that move down. But the RSI, which is measuring obviously relative strength here, isn't above the traditional 70 reading here. So it's in a healthy position. I think, you know, if we're talking generally here, I think with all the stock markets except the FTSE, that, you know, the next pullback, which means next down movement, is going to be very interesting, how deep that becomes.
So the question is, are you still happy buying this market? Or do you think now is the time to pull profits and step back?
I'm a cautious bull now. You know, I don't want to be greedy here. It's been great move up. It's been a V pivot all the way up. It's sold off, and then we've gone straight up. And I'm a cautious bull. I don't want to be too greedy in these markets. We've been long every day. It's been easy. When it gets easy day trading, i.e., you know, every open, 8 o'clock open in the European session when I trade the morning move. It's just been buying opportunity. You just buy the market, get your signal, and you're long, and you make money. When it becomes that easy, then I start to do the opposite and think, hang on a minute, we're getting a little bit toppy here. Yeah.
Well, let's take a look at a daily chart on the FTSE. I know you've looked at what's going on daily moves for this. This index has been a lagging index. It's incredible as to how underperforming it's been.
Yeah.
For a number of reasons, fundamentally, but technically. What's it telling you?
Well, I think I've had sell signals on the weekly chart, and I'm looking, if the markets indexes, when I say the markets, I'm talking about the main markets that we trade here in Europe and the major US indexes. If we do start to sell off, the FTSE is the weakest out of all of them. And I would, no doubt about it, short the FTSE if we had a big correction in the stock markets, because it's been the weakest, one that we trade, and it can't get itself going. This morning on the open, it was crazy. It was literally, I mean, this is the daily chart. You can't see it, the morning move, but on the daily chart, on the 5-minute time frame here, the DAX flew out the gate on the open. It went crazy, 120 points. The Dow was sort of like lagging and just going sideways to slightly higher, thinking, hang on a minute, DAX, what are you doing? You're going off on your own here. And then the FTSE was like, I'm going the other way here. And it pushed down. And we got close to that 7,400. It's a strange market. We've got this disconnection, maybe a little bit fractured, but that is a little bit worrying. In the bull market, we had them all going together. FTSE is very much well behind.
Okay, so taking into account what you said for the Nasdaq, when you get the sell-off on the Nasdaq, the FTSE would be where you want to go short, big time.
Yeah, I would do, yes.
Yeah. Talk about the DAX. Let's bring the DAX up and take a look at that, because this has been a bit of a standout market, which is strange when you consider. I mean, we've got fundamentally we've got some macroeconomic data out today. We've got consumer price index out at 1 o'clock UK time. German DAX on the way up today. Nice big green candle on the upside on this daily chart. Bearing in mind the problems the German economy has got, we're close to, if not already in recession. It's one of the leading indicators for the Eurozone, which doesn't look particularly good. And yet we've got money going into the DAX. Technically, why?
Well, the chart pattern, I'm a chartist, what I look at is the technicals here. And this is a V pivot. This is one of the worst trading patterns that is out there for any short-term trader, a V pivot. You sell off, and then you straight back up to recent highs. This is not a perfect V pivot, but V pivot comes all the way down and straight back up. There's no pullback to make a lower high, and that's exactly what we've done. I bet there's short covering going on here. People short the market, and then we go straight back up, and you see that with a V pivot. RSI is overbought, and if you look at the RSI across previous readings here, everyone that got above the 70 has sold off the market pretty much for 2 or 3 weeks here. And we're back above that 70 in the RSI reading here. MACD looks healthy and fine, but the RSI is over 70. But there's your all-time highs, as you put on that chart there. And let's have a little look at a fib while we're at it, because the fibs, we look for that 61.8% and that 76.4%. We're sort of poking above it there. And if it was going to stall, it's around this zone here where we're going to stall and then make the correction.
But again, going back to what we were saying, you wouldn't necessarily go short in this market yet, would you? What would you want to see to persuade you that there's a shorting opportunity?
I'd like to see a 4-hour time frame drop really hard and then a rally back up to make a lower high and then short that next move down.
Okay.
But here, I mean, we are just slamming into major resistance areas if you look left on the charts. We're coming into, what was it, December 2021, January, February 2021 there. That's just 280, 16,280. It could easily get up there the way the DAX is trading. It's been fun. It's been a fun ride.
Okay, let's step back from indices and take a look at one other area we always talk about. Whenever you ask any IG client, of course you're an IG client as well, they always say, where's gold going? So it's an easy one to comment on. I mean, at the moment, very easy because it's just seemingly, like a lot of these markets, going in one direction.
Yes.
Are you happier long gold than you are indices? Are you more of a gold bull?
I'm with gold. I'm very comfortable to sleep on gold and be long overnight. At the moment, I'm not comfortable to sleep with the indexes overnight. Yep. But gold, I mean, we've got this area here. Let's go back onto the weekly chart, Jeremy. You can see this 2080 area. I mean, that's not too far away. I mean, every technical analyst, every single chartist would be looking at gold here going, this 2000 and 2080. Okay, and I think if we break that, that's one high. That's a retest, that's a double top. That's a retest with a shooting star here. Then a little pullback, nice hammer, lower high. This has got every chance to extend into this area. And with gold, it's not a very liquid market. You know, I've moved gold, trading gold in the evening times and on the futures market with the price. If this thing can start to trend and spike, you watch it, it will absolutely fly in. A lot of people like buying gold, and gold is around the corner. I think I'm already in gold in a longer term position. I think if it breaks this high, you'll see maybe one of the best trends or moves in a market ever.
Okay, another question we always get is when a market reaches a record high, how do you anticipate a new top? How do you anticipate where it's going to go? How long is where's your price target, basically?
Well, I mean, that's the skill of a trader. That's the hard thing. I mean, the hardest thing in trading is running those profits. And, as long as, a nice little tip here is when the moving averages cross up, okay, they're nice here. They're a nice angle. They'll get to 45 degrees, which is nice. But if it goes parabolic and these moving averages go vertical, then it's going to have a reversion back to the mean. So they're in a nice place. The answer to your question is in a nice place now. MACD's fine. A little bit of divergence on the daily, but I'll be a buyer of the next pullback. Let's have a little look at the daily, in fact. The daily is a little bit of a selling candlestick today. That's fine. Moving averages are actually very healthy. They're just turning up. As they start to turn up here, then we get the spike. And then when price gets too far away from those moving averages, you'll see a big gap. It reverts back to the mean. I'll definitely bank some profits at some point, but the way to, sorry, Jeremy, but the way to sort of, grow the account is just to hang on for dear life as much as possible. And
of course, one must remember, if you're a trend trader, you want to keep on pulling your stop loss up in order to make sure you lock in those profits, because if you you don't want to get too far in the wrong direction.
Yeah.
Okay, interesting trade. Let me just quickly round up with what's happening euro dollar.
Yeah.
As I said, fundamentally, there's some interesting data out today. There's now speculation once again in the market that interest rates are now peaked in the US, and there's a possibility we could well see a drop in rates sometime in the first half of towards the end of the first half of next year. I mean, it depends on what bit of news comes out as to whether or not that is a reliable sort of deadline to go for. But technically, what are you reading on the euro dollar chart?
Well, it goes back. I go back, previously here to February 23. We make a high, we make a higher high, a higher low, and then we make a higher high, and then we break that structure. We break below this support area here, and this rally is quite interesting because, as you know, I do like my fibs as well. And we've stuck in here the 61.8%, the golden ratio, and that's where we're sitting right now with the euro dollar. So if the euro dollar is going to foul and make a new move to the downside and go on a new trend, it's going to be from these areas where we're sitting today in these fib areas. We don't want to go any further than the 76.4% really, but we're in major resistance areas. If this is going to stall, it's going to stall today, tomorrow, very soon for us. Because, then that could be the lower high from this high over here. And then we could easily go on a wave 3 down, which could be one of the most interesting trends for a long time.
Big could there, of course, because if we get a candle close beyond the, 110.79, the 76.4%, total retracement up to highs? I mean, how happy would you be taking that up if you've got a break and a candle close beyond that?
Yeah, I think, we've got that 76.4% I mean, there's a huge resistance area right in that 76.4% zone, here around 110.80. So I'd be happy trading it up to that area. I just want to see price action on that 4-hour chart. Down, up, down will be an indication that this market could drop on that 4-hour time frame even further. But it's been a great move. We're sitting at the round number, okay, so it's a good place to take some profits. Those round numbers are key psychological areas, this 110 area. So it is a place where maybe bank some profits and see what the next pullback's going to give. You know, RSI is overbought. It's a sensible. And we looked at a lot of markets here besides gold. A lot of these markets are overcooked. They just need that healthy pullback.
Okay, Lee, we'll leave it there. Thanks for joining us. It's a pleasure to be able to catch up with you again. Lee Sandford from tradingcollege.co.uk. Want to catch up with more with Lee, just ping him a message across his website and be able to talk you through anything I guess you've got questions for, then Lee will be able to help you out. That's Lee Sandford. Joining us there for today's Chart in the Markets. We'll be back at 1:30 today with the early call in the US markets, as we look ahead to the start of today's US trading session, and then again at 4 o'clock this afternoon, looking ahead to Thursday's trade. And I'll be back tomorrow morning at 7:30 on the European early morning call.